When do you think you should sell a stock? Is it when the price isn't going up as fast as you like? Is it when the price drops so low that you're now making losses? Or is it when there's something about the company that has changed that you can't live with? I'll give you to the end of the title credits to figure that one out. Welcome back everyone, my name's Paul. Now it shouldn't surprise anyone that I'm new to investing. I've recently started an investment portfolio with Trading 212 and I'm learning as I'm going. A lot of seasoned investors would say, oh, that's a silly thing to do, but you've got to start somewhere, right? When I first started a few months ago, I made some weird buys just based off my own opinion. And it wasn't until about February, March time where I started to develop a system and a strategy that I could stick to. And now, after the market crash, I'm trying to review a lot of my stocks and try and see if they're still a good fit for me. It's not very often, though, that I will even consider selling a stock. My plan with this investment thing is to go for a very long time with lots of different companies. And sometimes I don't think people get how long I'm looking at. I'm considering multi-generational here. As in, when I'm like 50 or 60, I'm thinking of passing it all on to my children and letting them continue it on. Because in theory, if I manage to get it to like 200 grand, maybe even 500 grand before I die, then they've got a good chance, if I can educate them as well, to carry that on. And they will have a much easier life than I have. So when I make a buy on a stock, that's always at the forefront of my mind. I need to have so much trust in these companies that they might even have to take care of my children. And I think people miss that at times with me by saying, oh, you're still young, you should be investing in growth stocks and then selling them on and then going for dividends later. That's not my plan. My plan is to buy the dividends now, so when I'm 60, the money that I spent on that dividend yield years ago is now worth a lot more. It's very possible that some of these shares might never get sold. So I don't necessarily try and find the next big company that's coming, but I try to find companies that already exist, are still innovating, and will hopefully be around for much longer than my lifetime. But I accept that sometimes I will have to sell a company. It could be because some of these companies are in industries that are experiencing severe headwinds right now, or it might be because a company are doing something so dog shit that I just can't agree with their ethos anymore. And the way I keep up with this is by consistently reviewing my stocks. I don't have to keep up with everything that's going on with every company every single day, but as long as like every year or so I see some positive movement in their free cash flow, or I see some movement into a new area, I'm happy to stick with them. And this month I've been looking at Novartis. Now Novartis is a pharmaceutical company from Switzerland, one of the big five. So you've got your big pharmaceutical companies like Johnson & Johnson and Pfizer, AstraZeneca and Merck. Novartis is probably fifth on that list. I bought into Novartis for a number of reasons really. Not all of them were brilliant reasons, but most of them were pretty good. So for instance, I wanted more exposure to European pharmaceutical, and Novartis seemed to fit that. I kind of liked Novartis' dividend growth. It's about 5% a year. It doesn't go up perfectly like, say, Johnson & Johnson's does at 6% a year, maybe even 7% a year. But it was quite strong, and it was backed up by cash flow, which I think goes up around 8, 9, maybe even 10% a year. These were really strong quantitative points for me, and they kind of pushed me over. The free cash flow is really good, and it's ever growing. But there's always the weakest stock that you own, and therefore it's your least favourite. And I think Novartis has always been that for me. But that's an emotion, and when I started to feel like this about Novartis, I set out on a month-long journey to figure out if it is exactly what I want. So we've seen that okay dividend growth, not excellent, but it is there. And the free cash flow growth is pretty excellent. The stock price has been relatively stagnant since the crash. Not bothered about that. It doesn't mean much to me at all. It just means that if it's got great fundamentals, that people might not have seen it, which means it could be a great value play. The PE ratio is high at 23. You would want to see it more at 15, something like that. But then Johnson & Johnson, Pfizer, I think they're all in the 30s right now. Novartis has year-on-year revenue growth, and check out that profit margin, 24% profit margin. Now, pharmaceutical companies are generally very good with their profit margin. The only companies that aren't really seeing a drop in their margin right now are tech stocks, because they're so expense light and so profitable. Companies that have had to shut, like restaurants like Starbucks and McDonald's, they have very high expenses and are not earning the revenue. So their profit margin is ridiculously small. Pharmaceuticals seem to have held up and weathered this storm, which is only a positive. And there are plenty more reasons why I got into Novartis. Qualitative level, look at this. Look at the amount of drugs that they have. Their line is absolutely huge. And these aren't small drugs, they're big ones like Tegretol and Ritalin. These are hugely popular drugs that are used on a daily basis. So from what I see, they have a really stable market hold and they've got a lot going on for the future. I also very much like their presentations on gene therapy. They were able to describe quite a lot of it on YouTube, which was quite interesting. So I really do know and understand that Novartis has a very strong future in the pharmaceutical industry. Novartis is also considered to be considerably undervalued. Simply Wall Street have it at 166. I had it down at like 140, something like that, but I based it on solely cash flow. So these are the reasons why I bought into Novartis and why I saw them as a long-term hold. And I keep up with them by looking at their presentations and looking at their videos. And this is one that got me from Vasant. No, I'm not even going to try and pronounce his surname, sorry. I'm always murdering CEO names, so I'm not even going to try. But this interview got me quite good.
We actually had 5 novel medicines get approved in Japan in one day, which is unprecedented for our industry. We saw Cosentyx approved in the US and EU for treatment of active non-radiographic axial SpA, and Zolgensma IV was conditionally approved in the EU. Novartis also made good on our commitment to resolve legacy litigation matters that the company was facing for many years prior.
So yeah, I was watching this video and I was looking at the Japan thing where it was like, oh yeah, very, very good. Oh, you got lots of new approvals. Brilliant. And then, what? What litigation? And I didn't realise that Novartis has been suffering litigation claims for years. And this is a problem for me because I didn't see it. Now you might think that, oh, I just didn't do my research. But actually the normal way I just look for news like this is I type in Novartis and then I click across to news. And it finds all of the latest big news for Novartis. And the thing is, these pharmaceuticals release so much news every day about their new approvals and their new positives that a lot of the bad news just gets flushed behind. Unless you actually typed in Novartis litigation, then you actually now only start to see exactly what Novartis has been up to. And this explained why the stock price has been so poor recently, because there were rumours that it could be up to $1 billion that they had to pay for this litigation between 2002 and 2011, where they paid doctors in Greece to sell their products. And you're not allowed to do that in the pharmaceutical world. So it dropped a little bit of shade onto Novartis that I didn't know about when I bought, which only made my worries about Novartis that little bit stronger. And so I went looking for further problems to justify why I might sell this stock right now. So I went to the financial strength and I saw that the most recent quarter of current ratio is now below 1. But I was willing to overlook it because of the projections in their future earnings, which does look very positive. It is very possible that Novartis could reduce its payout ratio in the future, but I'm just wondering how it's going to do that when it's taking on debt every single year. It is possible though, because one of my other pharmaceutical companies has gone from a 99% payout ratio down to a 34% payout ratio. So this isn't unusual in the pharmaceutical industry to be able to increase your payout ratio. I just started to think that Novartis was a little bit slimy, and I've lost my confidence in the company itself. During the economic downturn, it's also started selling some of its facilities, which isn't generally a good sign for something like this, especially when that facility was going to contribute heavily to the vaccine. Obviously, I'm not in there with the heads of Novartis, so there might be a very good reason for this, but I don't understand it now, so it's another good reason for me to not be in the company anymore. I'm also quite heavy on my portfolio with pharmaceutical and medicine with Johnson & Johnson, Merck, Bristol Myers Squibb, Medtronic and Novartis, so I think one of them has to go. And I'm choosing Novartis. So something I didn't know when trying to sell with Trading 212 was when you try and sell your stock and it's in a pie, you can't sell it directly. I didn't know this because I sell so rarely, so I had to have someone point this out to me. When you've got a stock in your pie that you want to sell, you can't click sell. You have to go into the pie and make it as a withdrawal. It took me forever to work this out, so you have to go into your pie, you have to click edit pie, scroll down to the company that you want, and then delete it from your pie. When you delete it from your pie, that takes it into a removed area. And then what you do is you go into the invest withdraw section. And what I did is I withdrew the exact amount of Novartis that I had. That then sold Novartis and put it back into my free cash pile. That does actually feel like a complicated way of selling a stock in a pie, but actually I'm not that bothered about it because I sell so rarely. And actually something like this does prevent me from making rash decisions. Anything that's like a barrier between me and the sell button, I'm quite happy with, as long as I can actually do it in the end. So hopefully that's a good enough description of why I might sell a company when I was so into it in the first place. Sometimes it's a fundamental quality like Novartis selling its assets, and sometimes it's information that you didn't know in the first place that you do know now. And it should take me quite a long time to figure out if I'm going to sell that stock. So if the market or a stock crashes at a certain time and I find myself at a considerable loss, I still won't sell at that time. I'll look into the company, figure out what it's done, figure out if there's a way out, and then I'll make my decision. Usually it will be to hold. And I'm pretty sure that a lot of people are feeling those emotions. Like this comment from Malk. This comment seems to have come from quite a dark place really, and it's a bit of a shame that Malk feels this way. Malk says, great video. I am one of those who is worrying about the losses that I now have. Getting worse every day. I have made too many mistakes, brought into the wrong sectors from a great gain in the first week of June to a massive loss. Look at Shell and the banks. It's painful to see. Can you do a video taking in the feedback from the comments? It's great to see others just like us and willing to chat about it. Malk has a great point that seems to be everything that's wrong with the internet at the moment. Now I don't know exactly what stocks Malk has got into, but he mentions the banks and Shell. And I reckon he's talking about UK banks rather than American banks, because UK banks are doing shit right now. And when I say right now, I mean always have. There really isn't a reason why I would get into a UK bank at the moment, and I probably wouldn't have for the past 10 years. That's not to say that Malk has made a mistake. The same with Shell. Oil is having a rough time. You might have also got into some of the big tech stocks last month and be seeing a 20 or 30% decline right now. The way to deal with something like this seems to be the one thing that all investors seem to agree on, no matter what style you are. It's that you should only risk capital that you don't need for the next 10 years, and also completely understand your companies to a point where if something really bad happened to the stock price, you would still stick to it. Unfortunately, Malk might not be in that great hindsight position. So what he has to do now with his banks and maybe even Shell is take a look at them, review them, and see if they're still the company that he invested in. So for me, I'm in a similar position with Shell. Shell's share price has rapidly declined over the past few months, and it's all to do with the declining price and demand of oil, and in particular a lot of news stories around that. So what I'm doing right now, and what I have been doing for the past month, is reorganizing my view of Shell. So I'm delving into their current revenues, I'm having a look at their renewable growth, and I'm trying to see if they're actually telling the truth about their renewable investment. This is going to take me weeks to figure out, and at the end I've got to decide whether I'm going to buy more, sell or hold. And unfortunately that's just something I'm going to have to do. I am not going to base my decisions on that share price. I'm going to base that decision on how strong I think Shell is as a company. And not whether it can just survive this crisis, but whether it can thrive in a future that's changing. Thank you very much for watching, guys. If you're interested in starting investing, I use Trading 212 as my broker. If you wanted to get investing, there is a link in the description below. If you follow that link and sign up, you get a free share and I get a free share as well. Also, don't forget to check the free Discord where there's about 2,000 members all discussing different types of stocks from all different walks of life. There's lots of people there you can discuss stocks with and bounce your opinions off. As always, please remember that I am not a financial advisor and I have no financial education. Thank you very much for watching, guys, and if you enjoyed this video, please feel free to like, subscribe, and invest.